Hey everybody, what's up? This is Marcher here with 123 Home Loan. I'm here with Patrick Murakami. Patrick and I go way back. Say hello, Patrick.
Hey guys, thanks for having me here today,
thanks for coming, man. We went to high school together. We both went to Doherty High School.
Spartans represent.
Spartans represent. Played on the football team. It was funny, dude. Last night I actually had a dream about Doherty. Like I hadn't been to practice in like 18 years, obviously, or 22 years, whatever, you know. And I was like, I guess they're like playing in the playoffs, and I wanted to play. So I had my gear, and I didn't have any cleats, so I didn't get to play.
So interesting. My son played Pop Warner.
Yeah.
And last year was coaching, and it brought back so many memories.
Yeah.
And it's so crazy that you could not have laced up for 20 years.
Yeah.
And you step onto that field and everything comes right back to you. It's such an incredible feeling, but it's so cool. But the hardest part, having played and having loved the game so much, is to realize that, hey, my son didn't have an older sibling like I did. So I played that sideline game all my life.
Yeah.
He never had that. He doesn't have like cousins that he could roughhouse and play with. Yeah. So watching him learn and grow and experience everything for the first time is such a different experience, and it's so hard to not be a sideline parent. It's hard not to be that parent that wants it because, I love the game so much, but that doesn't necessarily mean he's going to.
Yeah.
So such a hard lesson to learn, but it brought back so many memories to be able to step back up.
Yeah, I think my son's like 3 years old and my daughter's 11, and so she does swimming. So a totally different thing. Like,
yes.
Which is actually kind of a horrible sport for spectators, right? Because you sit around all day in this hot pool and you're waiting for him to go, and then it's like a minute and a half, 2 minutes. But I think about what my son might like. He doesn't really like. He's 3. He doesn't really do anything but chase the dogs around. And I'm like, do I want him to play football? Maybe I just want him to wrestle or play soccer or something, or golf. Yeah. So it'll be interesting to see what happens when he gets going in that and stuff like that.
100%.
But okay, so what are we going to talk about today? We're going to talk about as mortgage originators, I think one thing that we've seen a lot of over the last few months is insurance. Insurance has gone up. Insurance premiums have gone up. And because of that, people have seen their monthly payments go up. They've been seeing their monthly payments go up because their taxes have increased because their houses are worth a lot more. But the insurance piece is a little bit different. It can go up a lot. And Patrick, he's here with Mainstreet Insurance Agency to kind of tell us what that looks like and how that affects your escrow and what you can do for that.
Absolutely. So I think just like everything else, right? Groceries, utilities, in the housing market, material construction, everything has gone up.
Yeah.
Right. Within the last 18 months, housing market has increased exponentially. Average home cost went from $350,000 to $500,000. Right. So just so many different things. But unlike all of those other things, what's nice is that when the market had changed and shifted, so did your assets. And a lot of people don't really think about that aspect because they're accustomed to maybe paying a certain amount.
Yeah.
So I know it seems a little bit odd, but when people call me and they tell me, hey, my policy went up by $1,500, right now I know why. It's because their rebuild and their coverage area of their dwelling went up exponentially. But I'm telling people, congratulations, right? And they get really confused.
Yeah.
But the reason being is because I know that you went up 60, 50K, and where else can you get that type of growth in anything?
Yeah.
So if you haven't looked at purchasing a home, rates are still traditionally low, but essentially that's what's causing the cause of the price to drive up, right?
Yeah.
Insurance typically runs about a quarter behind, 6 to 8 months behind, and so 6 to 8 months ago, plywood was up to $75 per sheet.
Yeah.
We know we're back down to 20, 25, but their numbers and their claims history is based upon that.
Yeah.
So you're kind of back or retro looking at some of those things in terms of cost. But with everything else, market is very cyclical. Prices are going to be adjusted, and a lot of people don't realize that we are heavily in finances. We are the most regulated industry, right? Whether on the financial side, there's certain things that you guys can't say, you can't talk about, right? Rates.
Right. Exactly.
Same thing with the insurance. We're heavily regulated, and the insurance industry is very looked at on a day-to-day basis. People are checking those rates. They're checking for fraud. And so what most people don't realize behind scenes is that people are paid just like an analyst every single day to go and evaluate claim situations. What is the average cost to rebuild? what does the construction world look like? How soon can we get people to work on these things?
Mm-hmm.
And so because most people only see the surface level things, of course they're going to be concerned when they see price go up. But if you look at the paperwork, you're going to see it's because your home went up 40, 50, 60K in value. Again, that's huge assets increase. That's a whole year's worth of income for some people.
Yeah.
And to be able to get that in a single year, that's pretty crazy.
Yeah.
So
I think, and as we think about insurance too, is like, so my insurance went up, but I call and I ask, I'm like, hey, what's going on here? And there were some deductions that I wasn't even taking. Like I have a home security system. So if you didn't know that, that can save you like $40 to $60 a month on your, and I had it for the whole year, for 2 years. Mm. So they helped me out and they gave me a disc, like I had basically had some extra, a premium in there that they're able to refund me.
Sure.
But you shouldn't just spend that money. You should put that back into your escrow.
100%.
So that you can be prepared for any overages or any increases. They're not going to hurt as much.
Yes.
So let us know about that. Like, what is that? What is your escrow account? What you should do if you...
Yeah, so the way that it traditionally works, right? You have your escrow, the insurance company bills out to the mortgage company, and then they pay. You get the advantage of getting the paid in full discount price, mm-hmm. right? So you're already getting a discounted rate on your home and owner's insurance by doing so. But when you switch, a lot of times maybe you switch, you get a lesser price. Most people will get a check back for the difference, and they just think, hey, I'm going to take this to the bank. And you can do that.
Yeah, you can do that.
But how much faster, right, would maybe if you took that and applied that to a mortgage payment?
Yeah.
Right? Because even $100 every so often is going to reduce how many years off of your mortgage?
Yes, it decreases your overall
right.
effective interest that you're paying, yeah.
Yeah, but it also, it gets you ahead also on the escrow too. So if you just put that whole thing in there, it's out of sight, out of mind. It was pretty much already in your mind spent previously to shopping around.
Yeah.
It's just building that much more equity, so that way you have all that ready to go, and rainy day fund happens, something like that, you can always kind of pull that out if need be.
Yeah.
But you're ahead of the game.
Yeah.
And very few people in today's world are thinking about that next level. Very few people are kind of thinking about that because everything has gone up exponentially.
Yeah. Yeah, I think also with like your escrow too, is like when you're a homeowner and you're looking at your mortgage statement, a lot of people don't even look at their mortgage statement, right?
Not at all.
So you take a look at your mortgage statement, you'll see your principal and your interest.
Mm-hmm.
And you also want to see what's been collected for escrow every single month. And you can see how that number fluctuates. It can go up, it can go down. Now, if you're paying mortgage insurance, right, there's a piece
mm-hmm.
of your mortgage payment that's going towards that.
Yep.
And if you've been paying, if you're a homeowner, bought a house in 2019 into 2020, you've been in the house for 2 years now, you can petition to take that mortgage insurance off.
Yes.
You can call your lender. They'll do an appraisal. I had an appraisal done at my house. He came out, spent like 5 minutes, gave me the value, and said, "Yep, we're going to knock off the mortgage insurance premium." That helps out a lot.
Yep.
You know, so if you've been in your mortgage for 2 years, you can do that. And if you've been in your mortgage for 2 years, you've probably seen the equity that you need to at least cancel that. You know,
yep.
And then take a look at your insurance and know what you're paying for your insurance and your taxes. You can go to the tax assessor's page. Because your mortgage statement might not break it out individually, it's going to give you like a lump sum. So if you know what you're paying in mortgage insurance, you know what you're paying in taxes, because you can get that off the county assessor's website, then you can know what you're paying in insurance. A lot of people might be surprised to know that sometimes it goes up, like, oh my gosh, it went
right.
up $100 and I haven't even noticed it.
Sure.
So just being a responsible with your finances can do that. Just double check that and see where that money's going. And if it's if you think it's too high, then call somebody like Patrick here to get it revamped. You know.
Well, the other thing too, I think a lot of people don't realize that they can take the mortgage piece off of their loan, right? In certain situations, and that means that you can go and pay your insurance directly.
Yeah.
So you can actually, instead of getting that discounted paid in full price, which you can still take advantage of, but there are certain times when it's advantageous where you don't put that through the mortgage and you pay that individually, and then a lot of times in certain situations that takes off that mortgage insurance automatically as well.
Yeah.
And so again, depending on your financial situation, again, a lot of flexibility in
yep.
terms of coverages and changes. you mentioned, maybe some of these discounts that people aren't aware of.
Yes, pause real quick.
Excuse me, I'm sorry. Is this the law firm by chance?
No, that's down on the next door.
That one door.
Yeah, go to that next building.
Oh,
the
is
blue
the
building.
road closed?
Yeah.
I'm getting close. Like
There's a bunch of them, but there's one right there if you're looking for it.
You know if it's SJS by chance? Or?
I don't know.
Okay. Thanks,
I
Joe.
don't know. So we're downtown on Vermaho and around a lot of law offices, although that doesn't happen often. People do come in looking for places. But yeah, go ahead. Sorry about that. What were you saying?
Yeah, so you talked a little bit about some of those hidden discounts.
Yeah.
Right. When it comes to insurance, there's technically discounts is kind of a wrong wording. It's bundled savings, I guess, is the best way to put it, because technically it's illegal to offer a discount for a service.
Oh, right, yeah.
But there are a lot of different things that you can do. Bundling, obviously, most people are pretty familiar with that. The additional benefit of bundling, not only are you going to get a price savings, but there's also something called a combined deductible. And so what that means is your home has a deductible, whether it's for your all perils or wind and hail, and then also your car insurance, if you carry physical damage, also has a separate deductible. So if you combine policies, most companies are going to offer what's called a combined deductible, meaning you just pay your home deductible and it covers both policies. So if we experience a nasty wind or hailstorm and both your home and auto are impacted, you're only paying one deductible. So not only do you save money by bundling, but you also have that extra layer, so you're only paying the one deductible, which could be $1,000, $1,500 worth of savings.
Yeah, so I had that happen to me. Like we had a really bad, really wet snowstorm probably 3 years ago. And I had this house downtown on Cedar and Platte. It had like one of the oldest elm trees in the city, I guess. And this thing, we all slept in the main level instead of on the top because all these branches are falling and hitting. And sure enough, like 1 o'clock in the morning, boom! This tree falls over right onto the street. We had moved our cars, but there was still some damage that was done to one of the vehicles from another tree, and they combined the deductible. Like, okay, one peril, one deductible.
Yep.
The roof was damaged significantly. Yep. Like, car was damaged. This tree was gigantic. Like, people that came out and looked at it like, man, it's a good thing this house was built 100 years ago, because if it was built like it's built now, that tree would have gone right through the house.
Absolutely.
So, so I've seen that absolutely happen for sure.
Yeah. I think the other thing that a lot of people don't realize too is, yes, we're all price conscious and we should be, right? So having somebody to be able to shop around on your behalf, having, and I highly recommend anybody to be with a physical agent versus an 800 number agent for a number of reasons. One, it's by design that you don't know who you're calling on the phone, if they've been in insurance for 3 days or 30 years.
Yeah.
Right. Yeah. They're also just an advocate for that particular company. So you go from that person to the claims adjuster who also works for that company. They all share the same goal of trying to be profitable.
Yeah.
Right. I'm not knocking profit, right? I'm developing
everybody
processes. Everyone wants to make
pay
money.
The bills around here.
Yeah, exactly, right? However, this industry is very self-serving. And what I mean by that is that you have these billion-dollar self-insured companies who advertise on price.
Yeah.
When the very premise of insurance is to basically restore you to whole.
Right.
Now, most people will say that, insurance is a older industry. They'll talk about how this goes back to, hundreds of years. But if you go back to 55 BC, Chinese merchants kind of started the idea of insurance, because what they would do is they would own these ships. They'd ship everything out, but if that ship got pirated or if it got wrecked, they would lose everything. They'd be out of business.
Yeah.
So what they decided to do was share the risk. They all started putting small amounts on each individual boat.
Yeah.
So that way, if one of those ships did get pirated and did get shipwrecked, they still have content on other boats, and that person could continue and not go out of business.
Yeah.
So when we look at that shared risk piece, that's essentially what insurance is today. Most companies are at least willing to separate by state. So Texas hurricanes won't impact us here in Colorado. Colorado fires won't impact the guy in Wyoming. However, certain companies, some of the larger companies, do not mitigate that. They share that risk for all the states, especially if it's a private membership.
Yeah.
So not every company is the same. Not every agent is the same. You've seen this,
Yeah.
right? Where folks, same carriers, way different prices, way different coverages, different philosophies.
Yeah, yeah.
And so at the bottom, at the end of the day, what you want to do is understand what is your agent's philosophy. Because if your agent turns around and says, I can get you lowest price, we can all do that.
Yeah.
But at what cost?
Yeah.
And so if your agent isn't asking questions to figure out what is it that's important to you, for me, I take the stance that I'm not going to write the lowest policy. I'm price conscientious, of course, but first and foremost, I want to make sure that the assets are protected, because you've worked really hard. You've worked your entire life to own what you have. And for most people, their biggest asset is the home. And so if I never have a conversation about, let's say, adding service line coverage or water backup coverage, and I turn around and let you have maybe the lowest price, but I didn't talk about those things, or, some of these companies now offer like water seepage. And if I turn around and say, well, you don't really need that, and something happens, you're going to be really mad that we didn't at least talk about it.
Yeah.
If I at least give you the option, that's on you.
Yeah.
Right.
I think, that brings up a good point. Like, so when I bought my first house in 2010, I had like a sewer problem right away. The house was like 60 years old. It was downtown. But the problem was whoever installed the cleanouts, they encased them in concrete.
Oh, no.
So the concrete like cracked and broke them, right?
Yeah.
So here I am buying my first house, like fixed income. I'm like right out of college almost. And I had to pay like $3,500 like right away to get this thing covered. And then it wasn't until after the fact that, you can have an additional insurance policy for $30 to $40 a month.
Sure.
Now nowadays they include that.
Yeah.
And almost every insurance policy includes like your sewer and septic, right? So that's going to be covered. There's a certain deductible from the house to the street, and then an additional deductible for the street work, because that's like the most expensive thing, because they got to send like 100 people out there to close the street and do all this stuff. So one thing, like, and you might not even think about it, like you gotta make sure that's on your policy, because even homes that get new cleanouts installed, or there's a time frame on that. I think the time frame on that's even less than it is when they had it originally installed, because they had to move the ground to get it installed, and that stuff all settles.
Yeah.
So you just got to be conscious when you're shopping insurance policies, absolutely. Especially in what side of town you're on. There are different perils that you need to be aware of.
Sure.
If you're on a hill, make sure you have insurance for that.
Yes. And, HOAs,
Yep.
right? So if you're in a condo or a townhome, depending on what your situation setup is, but most of the time if you have an HOA, they're responsible for the outside. But I've seen people where they buy a home and then the HOA decides that they're in the middle of a claim, right, updating the roof. And even though you didn't live there at the time when that was filed, because you're a resident, you're still required. And so if you don't have the proper coverage, which is called loss assessment, if you turn around and get into that new home and you're responsible to pay $10,000 and you only have $2,000, or you don't have that coverage, it's not okay, right? Because you're coming in buying a claim for a brand new roof. Yeah, it might help the cost on the insurance a little bit, but that's not a great situation. And because nobody had that conversation with you to give you a heads up that this may happen, especially because hailstorms come every 5 years, like a major hailstorm. If you buy a brand new home, you got to fork up $10,000. That's going to be very devastating for a brand new homeowner.
Yeah.
Right. So to be able to have the right conversations, to be able to paint that picture of everyday experiences, really makes a big difference. Also making sure that you have somebody who is looking out for that long-term perspective, but also wants to build that relationship. And ultimately that's why I left working for the corporate companies that I did, because from both perspectives, as a person working there as well as the clients that I was dealing with, we were both numbers on both sides. I would get emotionally invested. I would be on the phone with 8 hours with these guys sometimes, going through every single product, and for them to basically say, well, let me make a decision, I'll call you back, and turn around and say, you can't call me, you'll just have to speak with the next person and hope that you get as good of a conversation as I did, right?
Yeah.
But for me, it was like, man, I just learned about this person's entire history, and I can't go and check in on that.
Yeah, that's tough.
My only requirement was to turn around and say, hey, do you want to go ahead and get this started today?
Yeah.
And for me, finances are very emotional.
Yeah, absolutely.
It's hard to turn around and want to go ahead and make a decision on a whim. Being in a relationship, you don't make those major decisions maybe without the significant other, because what does that lead to? A lot of fights, a lot of spats, all those different things. So it's not reasonable, I think, to be able to have somebody give you a yes or no decision on something that's very emotional right then and there.
Yeah.
Maybe a different philosophy than most sales, but
I think in like even in our business, sometimes we have people call want to get pre-approved, and first-time home buyers, like they come in. Some come in with a lot of questions, but most often it just, can I get pre-approved? Whereas like I think it'd be beneficial for any first-time home buyer to take a home buying class,
absolutely,
right?
absolutely,
or at least come and be ready to be on the phone with somebody for at least 15 to 20 minutes to ask these questions and for her to tell you how this process actually works, like,
yes,
and how important this is, like, for us to get your finances. How, if we ask for something while we're under contract, how quickly we need that back,
yes,
right? Because there's all these layers that people need to see this documentation. And if it's not getting in fast enough for us, they can't see it fast enough for us, right? So you have to make those things a priority. Absolutely.
So Mark, let me ask you this question here. I get this all the time. I'm sure that you do. Do you ever feel like that a lot of clients or potential clients or borrowers come to you and it's always comparison to what their neighbors, their coworkers, their siblings said, and so I always ask this question to my clients, and I said, if you broke your toe, if you had a toothache, would you go and talk to your neighbor who's an accountant? Would you go and talk to your neighbor who works, at the local 7-Eleven?
Yeah.
But we do this all the time when we're asking for advice, right?
Yeah.
And I mean, gosh, you maintain a professional license that you have to have continuing education. I've had mine for 19 years, right? I'm required to do 28 hours every single year. So I always find it funny that people turn around and ask their sister, mother, brother, cousin, about situations, not knowing all the things that go behind scenes and what's required to actually get actual numbers.
Oh yeah, I mean, here's the thing: is like everybody's situation is different.
100%.
Right? Everybody's credit score is different. Everybody's finances are different. So when somebody comes like, oh well, my neighbor got this rate, or his house is worth this much, like, we are all depending on professionals to give us the right answers, so that we can structure a loan, or structure a contract, or structure a policy, how we know how to do it based on this individual's circumstance, right? So it wouldn't be reasonable to believe that you can get something that somebody else has, right? In which case, like, if there are differences, then those are definitely questions you need to ask. Why is it different? Why, so that we can, this is why it's different, and I think also, like, in the lending world, you're talking about somebody that you've never met before, or an investor who doesn't know you from Adam, right, is lending you the money to make this purchase, right? Banking on the fact that you will pay them every month. Now, unfortunately, like, there is still a propensity for default on, like there is on car loans with homes. Things happen, you lose your job, you might not be able to make your payment for what happens there, so an investor or lender wants to make sure that they don't put you in a situation like that, because not only can that be very costly for you, but it's obviously very costly for them. But on the other side, that can be very dangerous, and can hurt your finances for a long time. Like, we had a realtor in here last week and said everybody is like one car accident away from ruining their credit, and it's like, that's unfortunately, like, that's how it is in that society we live in. Like, you get in a car accident and you end up in the hospital, like, heaven forbid, like, all these hospital bills, like, you might be stuck for a long time. So we want to make sure that you don't put yourself in a place where you cannot make your mortgage payment.
Yeah, and just to piggyback on what you've said there, so most people don't realize that if you experience a major loss for insurance, Colorado is a state that can and will garnish wages for up to 10 years. Just because you don't have the coverages to pay for it does not alleviate you from still paying that. And so because of that, if you haven't increased or looked at increasing your auto insurance coverages, especially if you're a homeowner, then you could be at risk. And for most people, their biggest asset is their home. Yeah. And so, again, if you are driving around with state minimum coverages, if you are a business owner and you can go and Google your name and you're on the first 3 pages of Google, what do you think a lawyer or somebody who's trying to sue you is going to come up with? Yeah. They're going to see that you have all these things. They can, public information, they go and look up your name in the county assessor and see if you're tied to a home. Yeah. Right. You can go on the Secretary of State website and see if you've ever registered a business. Yeah. All these different things that people aren't thinking of. because they want to save a buck or two. And again, I understand everything's going up.
Yeah.
It's important, but is it more important to pay a few bucks, make sure that you're properly covered, and that something happens, you can still have the things that you already own?
Yeah, that's it. So, I mean, well, we've talked about everything here.
Yeah.
I want to thank Patrick again for coming. Again, this is Mark, 123 Home Loan. Have any questions, you can call us, 795-010-100. Patrick, you want to leave your contact info?
Yeah, 719-309-6439. You can also find us on our website, insurancewithapurpose.com.
Yep, and we'll put all that in the description below. All right, thanks a lot, guys. Patrick, thanks for coming in.
Thanks.
Appreciate
Thanks,
it.
Mark. Appreciate you.